Well, in the oil space, prices rose today, recouping yesterday's losses as investors adjusted positions ahead of an OPEC Plus decision over supply policy. But gains were capped amid fears that the Omicron coronavirus variant will hurt fuel demand. Brent crude futures rose 85 cents to $69.72 a barrel after having eased 0.5% in the previous session. U.S. West Texas Intermediate crude futures gained 85 cents to $66.42 a barrel after a 0.9% yesterday. Global oil prices have lost more than $10 a barrel since last week, Thursday, when the news of Omicron shook investors. OPEC Plus will likely decide today whether to release more oil into the market as previously planned or restrain supply. Well, the new variant of COVID-19 Omicron has complicated that decision, with some observers speculating that OPEC Plus could pause those additions in January in an attempt to slow supply growth. Well, we'll talk more about that and, of course, other issues in the commodities market now, as we have joining us to share her views, Dumebi Eke, an analyst with Financial Derivatives Company, coming to tell us what she thinks about. Hello, Dumebi. Good morning. Good to have you again.
Thank you
Second
so much.
time this week.
Thank you.
Yeah. So, but Omicron is on everybody's lips now.
Yes.
But
yes.
it does look like the concerns are easing. I mean, even yesterday, stocks are rebounding, oil prices rebounding. So it's like people are not so worried. I mean, we can't even compare it to when Delta
yes.
broke out.
People are worried, but, you know, OPEC is having a meeting today. The decision is, you know, going to be read out today. And analysts or the market is expecting that OPEC Plus would hold on their output. So based on that speculation, the market is somewhat, you know, having some positive sentiment, you know, but there are other factors that are still, you know, of concern to the market, and that's because some countries are looking at renewing lockdowns. We're seeing travel bans here and there. Nigeria has, you know, Canada recently put Nigeria on a travel ban, on the travel restrictions list. So with all of those things happening, there are still concerns of, oh my goodness, is this going to continue? Are we going? And you know, this is the festive season, Christmas around the corner. People want to travel around. People want to travel back home. Some people want to travel, you know, probably to the US or to Canada for Christmas, and with these travel bans, you know, pouring in, it's still, you know, raising some level of concern. I mean, if we look at the price of oil right now, it's not as high as what it was in October or early November. So that still tells you that there are still concerns in the market, still concerns about the virus. And I think another thing that is bringing some level of bringing down the heat, so to say, is because you know, producers of the vaccine are saying, okay, they are already on their toes to look at whether people that are already vaccinated can actually, you know, if the those that are already vaccinated, if the vaccine, you know, can,
if they have immunity.
Yes, if they have immunity, some level of immunity against this particular variant. So that as well. So with them coming out to say this, it's also reducing some level of concern in the market.
Okay, so a lot of analysts are forecasting that OPEC will not increase supply, that perhaps they will just stay on the 400,000 supply. So what would that mean? What picture does that bring to mind?
So let's first look at the base case scenario here. The base case scenario, which is somewhat like a best case scenario, is that OPEC actually holds. They do not add this 400, and that's because, you know, the US...
possibility of reducing?
No, not reducing. So no reducing, no increase. You just hold on it.
Is there a possibility
of reducing supply? There is that possibility, but it's highly unlikely.
Slim.
Yeah, it's highly unlikely, and that's because they have followers within this cartel, like Nigeria. You know, that if anything happens to their, you know, supply, you know, this will affect, yes, it will affect their income, so they most likely wouldn't do that. You know, the break-even points for several countries within the cartel is very different. A country like Saudi Arabia or like Russia, that's now OPEC and its allies, like Russia, they break even when they make a lot of money, even when oil prices are $40 per barrel, $50 per barrel. So how much more a country like Nigeria that needs oil prices to be as high as $137 per barrel before they break even? So the cartel will most likely not reduce the quota, they most likely, the base case scenario is that they would actually hold. And that's because they are not only weighing the impact of the Omicron virus on demand, global oil demand, but also the action of US and other, top consuming countries. They are already releasing their strategic oil reserves into the market, and that is softening prices. So OPEC is not only faced with the Omicron variant, but also that decision. So if supply is increasing from this end, so they most likely might, hold. Yeah. So that's the base case
scenario. But we don't
see
them increasing.
No.
I mean, not with the threat of Omicron.
No, not with the threat of Omicron, because OPEC has always, since what happened in Q2 2020, they have remained conservative in oil supply. So they would rather, if anything, if they want to put supply out there, they would rather probably maintain the 400,000 barrels per day increase.
What does this mean for Nigeria? Because I don't even think we're still maximizing our quota anyway.
Yeah, so Nigeria is still far below the quota. OPEC recently increased Nigeria's quota for both November and December to 1.66 million barrels per day for November, and then 1.67 million barrels per day for December. But as of October, Nigeria is just producing about 1.35, and that's due to the issues of vandalism and, high operating costs for the oil extraction zone. So with issues surrounding Nigeria's oil supply and oil production, what this means for Nigeria is that Nigeria could still struggle with revenue. At the moment, Nigeria is more sensitive to changes in oil production than prices. So if oil production is largely affected, we would see a more significant impact on Nigeria's revenue. So we're looking at external reserves being hit. We're looking at foreign inflows reducing. And all of this is going to have an impact on the naira. This is also going to have an impact on the foreign exchange market. So there's a lot of things that could happen for Nigeria in that regard.
Yeah, talking about the foreign exchange market, I mean, yes. One is that the foreign airlines, and we now have a problem because of our foreign exchange supply.
Yes.
So this is going to affect travels.
Of course.
Especially at a time
when it's going to be at its peak. So clearly, the first thing is that the issue of forex supply has been, of concern over the years, and that's because once there is an issue with consistent forex supply at the official window, even for the IATA as well, we would see a ripple effect in import costs. You see a ripple effect in travel. You see a ripple effect in flight tickets. And if we look at the IATA rate over the past few months, it has depreciated sharply from about 415, or even as of last year, about 360 naira to dollar to about 444. So there's already that spike in the value of already a spike in the value of forex for this particular cause. How much more now that there is now shortages? So there's the impact on the repatriating of this fund. So already the IATA, with their presence in Nigeria, so some of the travel agencies and the IATA, they're finding it very difficult to repatriate their funds because of these dollar shortages. And then people that want to travel can't travel back to Nigeria. They can't even access flight tickets. So the travel agents have been told to stop that. So and that's all because of forex shortages.
Contradictory, because last week, the CBN governor was at the CIBN, and one of the things he said is, now we have enough supply. And then we've also had some analysts come here to say that some people who hold dollar, actually artificial demand, they're creating artificial demand. So, I mean, what do you see going on in this space?
Okay, so here's the thing, right? The dollar supply has to be consistent. If you're increasing dollar supply today by 119%, if you're going to maintain that increase, then you will see the impact. But if today it increases by 119%, tomorrow it increases by 2%, and the next day there's almost no increase in dollar supply, people will, there's going to be speculative activity in the market. So people will say, oh, today there was increase, so I'm going to hold the dollar that I have now. Make the most of it now, because you really don't know what next is going to happen. So there's so much of uncertainty in the forex market as to whether supply is going to increase today or it's not going to increase today. So the bone of contention here is a consistent increase in supply. So if we're increasing by 100%, let's know that's going to continue every day. If we're increasing by 50%, so the business owners, the people traveling, the individual that wants to just change dollar to naira, everybody has an idea of what to expect in the market. And when all of this begins to happen, we'll see the ripple effect in the parallel market rates. We'll see the ripple effect in the IFX. We'll see the ripple effect in the IATA rate as well. So, but the fact that people are going to keep speculating as to what to expect on supply and the entire forex market dynamic. So it just keeps people, they want to either hoard or, you know what, I'm just not even going to travel this year. Yes, exactly.
So I guess that goes back to the issue of supply.
Of course, yes.
Yes.
Right now, the issue with the forex market is just the supply. It's just the supply. There are other factors that are affecting the exchange rate, but right now, the most important aspect of it, or the crux of it, is the forex supply. If supply is not consistent, because if you're pumping supply into the market, people know what to expect. It's like an investor who wants to do business in a particular country. If you can say, okay, oh, if inflation is going this way, exchange rate is going this way, okay, I can make an investment decision. But when you're not sure what to place on macroeconomic indicators, it makes your decisions shaky. So for companies that, you know, need forex for the importation of their raw materials, at this point they're looking, okay, so today it's increased, tomorrow it didn't increase. Okay, you know what? Let's just buy as much as we can now, and then at that point in time you could see a sharp depreciation or a sharp, you know, appreciation. Then the next minute you're seeing the naira is flat. You know, so a lot of things will just keep happening, except if forex supply is consistent.
But have we felt the impact of the SDR, of the Euro bond? Have we felt the impact of those?
I mean, yeah, there was a time when the external reserves increased, you know, from what it was for about 35, 36, now it's about 40, 41. It almost increased to 42. So we saw that, and we also saw the ripple effects in the forex market, you know. But like I said, it has to be consistent. If we're having a shortfall of revenue and then we resort to external borrowing, and with these funds that we're getting, we're putting it in the external reserves looks buoyant. Investors are, oh, they have external reserves, oh, it's looking high, but the naira is suffering, then there's still a big question. But if with all this money, with all this SDR and the Eurobond that we're getting, the external reserves is looking buoyant, but there is also a significant and consistent increase in forex supply to the official window. We would see things,
so I think at the bottom line, we still come back to the conversation of diversification and,
of course, yeah, to boost the government revenue,
because that's basically where it comes from.
The country's mainstay is still oil.
And oil production is not optimum. So we are still going down in that area.
I mean, right now, Nigeria's export earnings always still accounts for about 70%. And for the external reserves, about 90% is gotten from oil revenues. And we make more money when we produce more.
So we hope to produce more. So do you think that this proposed stopping of the subsidy will have any effect? At least we won't have to be paying. That is if it is implemented by June, as promised.
Yes. So the thing is, in terms of revenue, removal of the fuel subsidy is supposed to free up cash for the government. And the big question is now what the government will use this money for. Because we still import refined petroleum products. So we produce the raw material, we sell it, but then we import the refined petroleum products. So that's why we see it's being subsidized, because by the time you put the dollar impact, by the time you put the global price of oil in the market, and then you're getting the refined product, you know, the refined product is obviously going to be more expensive than you just selling the raw material. So with all of that, with that happening, and then the fact that we're now removing fuel subsidy, first of all, it's going to fully deregulate the downstream petroleum sector, making it an incentive for investment. If investment increases, it's a good sign for increased production. And then not only that, we're looking at the Dangote refinery resuming operations as well by 2022. Defunct refineries as well, they're being rehabilitated. And refined petroleum products, the expectation is that refined petroleum products will increase. So meaning that, number one, the government has more money because you're not paying subsidies anymore. And the supply of refined petroleum products within the domestic economy is expected to increase. So meaning that demand should be met.
Boost economic activities anyway.
Yes, within that sector. Within that sector. So in the medium term, we're looking at, okay, we remove subsidies. Yes, the price of petrol is going to increase. People are going to feel the brunt, but the majority of people that make use of fuel are not the masses. you know, they will feel the effect in transport fares, but it's not going to be as much as the person that actually owns a generator in the house that is buying fuel, or the person driving a car that is buying fuel. So for the government, it's going to definitely free up cash for them. The expectation is that they would use it for more capital, you know, projects that will, you know, in turn affect
this
yes,
whole
economic development.
Exactly,
and
boost more of the masses,
exactly,
you know, will feel the impact. Well, we do hope, and but I think the government still has a lot of work to do to convince Labour and some other unions before they
yes,
can get.
Yes. So there is that dynamics as well, because the conversation will always come up. How are you going to mitigate the impact of this removal of fuel subsidy on people? And that's where the conversation around the 5,000 naira stipend.
Buying a litre of petrol for about 300, 400 naira, you know.
Yeah.
Anyway, but just before we let you go, what's going on in the commodities space? What else is going on there?
Prices are still high. We're in the festive season, which is normal, but weak consumer demand is still very much a factor that you know, that considering consumer disposable income is really down. But commodity prices are still going to remain elevated, especially during the festive season. So that's what we're likely going to continue to see in the commodities market space.
All right. Thank you so much, Dumebi, for sharing your thoughts with us this morning.
Thank you.
Enjoy the rest of your day.
Thank you so much. You too.
All right. So after the break, excerpts of the speech of the governor of Central Bank at the 56th Chartered Institute of Bankers of Nigeria is still generating a whole lot of conversation. Find out which parts we are talking about next. This is Business Morning on Channels Television.